Hello, hello. How are you? Hope you're doing well. So let me share my screen. Sorry, I've been late. Very long day. What are we trading today? I don't remember. Oh, gold and bought it, sold it, bought it again. And Euro USD. So yeah, we are back. So today I'll do more of it's good. Technical analysis. We'll also analyze whatever we did today. First, we'll finish what we were doing last time. Yeah, so and we said we are using this broker. They are called Handtech. So they are good with liquidity, automated trading, swing trading, mechanical trading, scalping, however volumes, however you have, they can manage. So they're okay. The idea is also the spread, they're fine. So let's go to chapter 2. Chapter 2.
ايوه يعني يا جماعه ويمكن يسوقنا اسمع.
Yeah, here we are in chapter 2. So chapter 2, we were talking about currency pairs. Is it here? Yeah, I believe it's here. Yes, elementary concepts of the forex market. So I believe you have seen since COVID happened, most of the jobs have gone working from home, and I believe that would be the same model that would be employed by most companies. So we as traders, we come to bring you the good news that trading, yes, can be also a work from home kind of a gig. It interests you. All we do is buy and sell currencies. We buy low, we sell high. And at least my MT4 today is behaving. Let me open it. You open. Yeah, it's opening. 1 minute. Give it 1 minute. Almost there.
الحمد لله برو ما شاء الله اني waxaan dhihi jiray liso dare iska qaadanayo iska qaadada waxaan dhihi jiray caaqowga isku cab.
So let's continue. Yeah, you can see these were the trades I was playing today. Usually. Yeah, and it's alive, by the way. Where is it? Yeah, this one. It's a live account. You can see real 1059. So at least today we made an extra $194, roughly estimate. Today's date 29th, right? Let's go to, yeah, you can see this was 29th, this was 26th, 26th. When where do you close? Oh, this is the time you close. Yeah, so this is the open time, this is the close time. So let's look at what we closed today. So there was this one 29, 21 plus 41,
62.
so that was 62 plus 18, 10 carry 1 6 7 8 $80 plus an extra 10, that's almost another 29. Yeah, so roughly to
24 plus 15.
yeah, you can see there's also $15 extra, roughly almost $100. So it was a good day. So, and you can see overall here we have made some $330. That's almost 33% of this account. And we started trading it, I think, on, yeah, we started trading it on the 22nd. 22nd was when? Last week. Let's see. It was last week around Tuesday, right? Let me check with my iPhone. This one is not. So it's good to update you. This was on 22nd. Was on Monday. Yeah. Oh, Monday. Monday. That's roughly 5 days. 1, 2. Oh, we started on 24th. 1, 2, 3, 4. 4 days. So 4 days, we will take 330 divided by 757 times 100. Quick math I'm doing here, we see how much in percentage. Divide by 757 times 100. Yeah, that's an extra 43%. And you can see our margin is good. So yeah, we are profitable. So whatever I'm giving you, this video today was to show you that it's working. So we short the market when the market is going down, and we go long and it's going up. So today I was just introducing to you what it is. This is an election year. So, but today's video I'll not touch about that in fundamentals. Today I'll finish part 2 of our last training on technical analysis. So then I'll give you a homework to go and read about the candlesticks. So today let me just talk about the whole business, the aspect of making profit in this business. So there are so many events that push the prices going up or down. There's something called price action. Price action, I believe you know it. But let's first go through the theory. Then we'll do the exam we did. Then we'll do a data analysis for this week. Then we'll see what news we'll be having on our calendar. And then we'll be good to go. So let's get started. In foreign currency trading, there are always currency pairs, the base currency and the counter currencies. The base currency is the essence of our product. So let me go back. So this is the base currency. Minutes. Base currency. I love the Euro USD, so let me use it because 80% of guys are usually trading it. So the Euro, you can see here Euro, this is the base currency. Or if you're trading gold here, XAU is the base, then USD is the quote, right? Yes. So it is the essence of our product, and it is denoted on the left side of the pair. We always buy or sell the base currency. The counter currency, it is the means of payment and is denoted on the right side of the pair. In a transaction involving the Euro USD, I will buy or sell the Euro against the USD, wherein the means of my payment is the USD. So then the exchange rate will be is the price of 1 unit of the base currency in terms of the counter currency. Let's take a look at the euro against the USD. 1 euro is equals to 1.5220. So this is 1 is equals to, let me now explain to you down here. Spread is the difference between the buying price and selling price, and is the commission which you pay as the currency traders. I believe we had gone through all this. So I'm not going to dwell much on theory. As I told you, I'm dwelling today much on practical. It's good to show you exactly how you make money. Because at the end of the day, you need some money. $50, $100 a day, even 200, 300 is good for you. So the buying rate, we had gone through all this. So recap of the last video, I also uploaded it. So I won't touch much of this. I'll start here with pips. Yes. So another important concept in the forex market is pips, and we said pip is singular, pips is plural. In the forex market, the exchange rate rises by pips or falls by pips too. Oh, it's gone. So, but I had touched about this. So that I go to the introduction of the daily fluctuation on the other PDF. Yeah, so this one I had touched, I remember, about the Japanese yen. Prices by 3 pips. You can see this is 57. This other one will be 60. So let's go down, down, then we do the exam now. So average daily fluctuation. To become acquainted with the concept, the average daily fluctuation of the Euro USD is about 100 pips a day. Whether it's going up or down, your job is to enter and catch some pips. So on more turbulent days, the fluctuation reaches 2 to 300 pips. Let me put this one down here. I think that's okay. So on calmer days, the fluctuation it reaches 50 to 60 pips in terms of percentages. If the exchange rate is currently 1.5220 and I want to announce that it rose by 1%, that's roughly 152 pips. So most of the time you'll hear us say the market was up 1% or 2% or it was down 3%, 4%, basically saying the value of how much pips it rose or fall. So if you say that the daily fluctuation is about 100 pips a day, but what percent does the Euro USD fluctuate on average? It's about 0.7 to 0.8%. Remember, it's the whole globe. Anyone who is exchanging Euro USD, it doesn't matter whether you're doing it in the bank, you're doing it in the bureau, anyone, as long as they're exchanging, buying or selling Euro USD. That's why the movement usually is very, very high. And you can see in more turbulent periods, sometimes it will move up or down 2%. So our job is to catch this move very, very early when it's going up and very, very early when it's going down. Every now and then we catch the moves and make money. From this, we can learn of a new and important advantage that exists in the forex market. It is very, very stable. It's very hard for you to be able to manipulate the market. And I'm referring mainly to the major currencies, Euro, USD, Pound, Yen, and the Swiss franc. Also, it's a very stable market with exchange rate fluctuation of half a percentage up to 1.5% throughout the day. You can see that's a lot. There's no possibility that you will trade a currency and lose 10 to 15% a day. So we look at the market in terms of percentages. How are we making money in terms of percentages? 1%, 2%, we get in, make us money, move out. Then the more we compound those many wins, the more we find that we have made some good money. So what's the value of pips? So let's run the value of pips. So how value within the confines of a particular transaction. If the exchange rate of Euro USD is 1.5220 and you want to buy 100,000 euros, how many USD do you have to pay? 152,200, of course. A second place and the exchange rate is 1.5221. You can see it has risen here. By how many pips did the exchange rate raise? By 1 pips, because you can see this was 1.5220 and this is 1.5521. And what's the current value of the 100,000 euros? 152 to 10, which is 10 USD more. So this ones I think I had also touched on. So the value of 1 pip for 10,000 euros is $1. The other transaction, 100,000, each pip has a value of $10. And the value of transaction of 1 million euros will be 100 USD. So how are they calculated? I won't go through all this. Let's go directly to the assignment I gave you. Then I will touch a little bit about size of the spreads. Yeah, these ones I had gone through. Commissions. Yeah, I remember. We said stocks have higher commissions. If you go to compare commissions are paid in stock markets, we will notice that in the forex market, the commissions are rates are very low. So trading rules, if you're trading a certain product and you think that its price will rise, you will buy it if its price indeed rises. You will profit then when sell it. We also talked about this. For example, if you trade wood and you think the wood price will rise, you buy 10 tons of wood. Then when the wood price is 100 USD per ton and later you sell it when the price rises to 150 USD per ton, you have profited $500. I had touched this. It thought that the wood price would decrease. You'd wait until the price reached 50 USD per ton and then you would have bought the same tons of wood only at $500. The rules are a trader who thinks the value of this product is going to rise buys more goods. So if you think an asset or anything you're trading will be more or will add value, you buy more and wait for the price to rise. Then when it rises, you sell and make profit. A trader who thinks the value of the product is going to fall will rush to sell the goods and make the most of his money. So you sell because the price was what do you call it? Overbought. Then when it falls, you buy it back and make more profit. So traders not always lose everything or gain everything. The trade can be stopped out in the middle, and such a situation will be expanded upon further or later. Let's translate this into an example in forex. If you expect the exchange rate of a currency to rise, you will buy it. But if you expect the exchange rate of a currency to drop, you will sell it. The sum which you profit or lose depends on the volume of the transaction which you perform. The greater the transaction, the more you can profit. So I had promised to show you that today. At least I have an account. So let me show you what that was meant. So if I click here, new order, if I click new order and I see 0.03, or I come and change to 1 or 2 or 8 or whatever I'll be trading. If I do that, that is to mean that, for example, the higher I use this lot size or this volume, the more or greater the profit or loss. So I hope you have understood that. So the greater the transaction is, the more you can profit, but you will take on a greater risk. And the smaller the transaction, the smaller the profit. So number one rule I usually tell guys is risk management. Always know what you're willing to lose. Ratio, risk reward ratio. Is it 1:2, 1:3? But at least always have good risk, because the first rule of the market, protect the account at all costs. So trading currencies is exactly like buying, selling wood, tomatoes, or cucumbers. We buy the goods when we think the price will rise and sell when we think the price will fall. Thank you. Transaction position. In order to complete transaction, you need to perform a purchase and a sale. If a purchase and a sale were not performed, then the transaction was not completed, and it doesn't matter if you are going to gain or lose in the course of the transaction. Remember, this is an important rule. Realization of the gain or loss occurs only when the transaction is complete. So opening of the transaction, I think I've showed you guys that. Opening a position which hasn't been closed, in other words, the transaction has not yet been completed. Close position, a transaction which has been completed. The actions of purchase and sale have been performed. Yeah, what changes the whole picture and turns the forex market into a market of opportunity to profit a lot of money in a short span of time is leverage. So leverage is borrowing money to make money with. But so this is what what is leverage. Brokers allow you to perform transactions in sums of money which are much larger than the amounts that you have in your account. It's like me borrowing money to make more money or have a bigger position in my account. Sometimes it can go up to 400 times more than what you invested. So then once I make profit, then the broker will make a commission out of it and everyone goes home happy. You deposit $1,000, the exchange rate of the euro against the USD is 1.5220, and you believe that the price of the euro is about to rise by 100 pips. That is your opinion. You can pick up the phone and call the broker or give an order via computer. 24 hours a day, please buy me 100,000 euros. Despite the fact that you deposited $1,000 and 100,000 euro cost of 152,000 USD. In this case, you have taken advantage of leverage of 152 times the money you have in your account. So this is one of the most important things that makes forex very lucrative, because you can come with small money, $1,000, trade it probably at 10, 20, 30, even $100,000. But the thing is, you are using leverage 152 or even up to 400 times. Others go even up to 800, even 1,000 times. In a transaction of 100,000 euros, how much is each pip worth? We had learned this, remember? Let's assume that the exchange rate rose to 1.5320. How many pips have you earned? 100. And how much money have you earned? 100 times 10. Wow, that guy just made $1,000. Anyway, so as I was saying, we will also deduct the commission. So, and the profit from the transaction will be $970, nearly 100% return in one day. How great! But what will happen if the exchange rate falls? So this is what I was saying. This guy has entered with a very big margin or leverage, because doubling an account a day, oh, that's a lot. So, but then if the market goes against you, now 1.5120, then you will be on a losing position, 100 pips, and you lose all your money, $1,000. So you can also lose. So, but I usually say the reason why you have seen good performance on this account is because I'm really adjusting a lot of good risk management. So you can see now the gold is falling. So here you could have entered a short around this line. maybe up to 2024. Then wait for another resistance because this is in March volumes, if you can see. So let's continue. So when there is leverage, so should you leverage? Later on, you learn whether it is worthwhile to leverage your transaction and by how much. But one must always remember, for whoever wants to leverage, the option is always available, but it's too risky. When there is leverage over 300 times, you can perform a transaction of 300,000 euros as well. And if the price rose by 100 pips, you can even earn 300% return in one day. This is the maximum you can earn in the markets. So if you divide that by, I don't know, 4 quarters, how many hours do you have? 24. Divide by 4, 6 hours. 6 hours, 6 hours, 6 hours. So that's 300 divided by 6. That will be around 50% every 6 hours. Yeah, that can be very, very possible. So, but if the exchange rate decreases by 33 pips, you have lost your whole investment. The answer is simple. It is preferable for them that we perform a transaction of 1 million euros rather than a transaction of 10,000 euros. In this way, the broker earns a commission of 300 USD and not $3. Later on, you learn what your interest is as traders and why you shouldn't be tempted to leverage transactions. So it's a leverage is a double-edged sword. You can make a lot of money, you can also lose a lot of money. So protect your capital first, then trade according to your plan. So this was the exercise. So what is the meaning of the word spread? This one is easy. Should be the difference between the selling price and the purchase price, right? Yes. What is the average daily fluctuation of main currencies? We say it is roughly 1%. I hope you are following and also marking your end. In a Euro USD currency, you purchased €1. The deal is 150,000 euro. What is the value of each pip? So this one should be what? I think 15. Yes. C. Let's see if it's correct. What is the secondary currency or a variable currency and where it is to be found? On the right side, yes. The secondary currency is our product and it's always found on the right hand side of the currency pair. So it should be A, right? Yes. And then question number 5. The time of the deal opening, the account will be in state of negative balance of the spread, I think, right?
Yeah.
Because the pips haven't moved, but it's the spread. In a Euro USD, the currency rate is 1.220 stroke 1.2. You purchased 200,000, the currency rate reached 1.2250, and you close the position. How many pips did you make? So this is 1250, should be 50 pips, right? I hope, I'm not sure, I will check. In Euro USD currency, the rate is 1.220. So we purchased 200,000, the currency reached 1.22. From how you close, how much money did you make? Okay, question 7. I think we are done. So let's look at the answer. So this one is 940 and the other one is B also. 47 pips. Then so basically the exercise is to help you understand. The other one is D. Yes, negative balance of the spread. That one we got it. Then the other one is D also in C. So the secondary currency is a method of payment. No, that's number 4. 1, 2, 3, 4. The same answer is D.
Yeah, that's exactly the reason. Always fall on the right hand side of the currency pair. Currency is the method of payment. This side, currency of
Oh
payment
yeah,
is
yeah,
left.
yeah, yeah. It's D.
Seeing a base.
So there is then question 1 was D and question 2 was B. So D, this one was B, that one was correct. Then question 3 was C and 4D. C, yeah, this one I got it, and 4D. Yeah, okay, so thanks a lot for participating in that exercise. So we sent the books so via WhatsApp. So let's go to our other work for the day, so that at least we do something. So we have seen the markets. So we did the introduction to our curriculum. Oh yeah, we were here, basic terms. The same thing we did, so I won't go back. So I think I will skip the terminologies. Cross-rate the currency exchange between two currencies, both of which are not of the official. Just a minute. Yeah, we were here. So cross-rate the exchange rate between two currencies, both of which are not the official currencies of the country in which the exchange rate quote is given. This one we said, for example, you are in the US and you will hear someone looking at the British Japanese yen. That's a quote currency. The currency exchange rate between two currencies, both of which are not the official currencies of the country in which the exchange rate quote is given. This phrase is also sometimes used to refer to currency quotes which do not involve the US, regardless of which country the quote is provided. Leverage and all the rest, these ones we had gone through. So basically, you can see this was the base, and this is the quote currency. And they look like this. Ask price is the price at which the market or your broker will sell a specific currency pair to you. Thus, at the ask price, you can buy the base currency from your broker. Then bid or ask spread, the spread of a currency varies between broker and this is the difference between the bid and ask price. So I think that's fine. Yeah, you can see the spread, the difference between the sell quote and the buy quote of the bid and offer price. For example, USD reads 1.3220/03. The spread, the difference between these two, and will be 3 pips. In order to break even, the position must move in the direction of the trade by an amount equal to the spread. Yes, there is order types, long and short, order types and calculating profits, buying and selling. So this one, let me explain. The basic idea of trading the market is to buy low and sell high. So this is where I was saying we buy low and sell high, or sell high and buy low. I know that probably sounds a little weird to you because you are probably thinking, how can I sell something that I don't know? Well, in the markets, in the forex market, when you sell a currency pair, you are actually buying the quote currency, the second currency in the pair, and selling the base. So I think we have done that in the last exercise, long versus short. When you go long, it means you're buying the market. So we want the market to rise so we can sell back our position at a higher price than we bought it. This means we are buying the first currency in pair and selling the second. So if we buy the Euro USD and the Euro strengthens relative to the dollar, we'll be at a profitable trade. Short. When we go short, it means we are selling the market. And so we want the market to fall so that we can buy back our position at a lower price than we sold it. This means we are selling the first currency in the pair and buying the second. So for example, we are selling the pound and buying the Euro USD. We are going long, we are buying the Euro and we are selling the Euro USD. So, and if the British pound weakens relative to the dollar, will be at a profitable position. We quit and take our position, take our profits and buy back. So basically that's all we do: buy, sell, buy, sell, buy, sell. We also have order types. Now it's time to cover types of order types. Oh, there's a question. Let's first answer the question. Oh, sorry. Oh, sorry about that. So we have order types. Let me go slower, a bit slower. So I was talking about going long and short. I believe you have understood that, right? It's when you are buying. When you go long, we are buying the market and we want the market to rise in our favor. so that we will be able to sell back that position. And if it goes back to our way, we'll be in a profitable position. Let me show you using the real market. Okay, just a minute. Yeah, it's here. So now this, for example, I'll give an example. If I say new order, so but if I say sell, I'll be going short. That means I'm anticipating the market will fall. And if it continues falling, I'll be able to be making money. If I say new order and I go long or buy, then that means I'll be buying the market. So basically that is to mean I'll be profiting when the prices is going up. So that was the difference between long and short. So let me finalize with the order types. But there's so many. Okay, no problem. Let me just go through them. Let's go through the first one. It's time to cover order types. When you execute a trade in the market, it's called an order. There are different order types and they can vary between brokers. All of them have basic order types. There are special order types and they are that are not offered by all brokers though, and we will cover them all below. Market order. Market order is an order that is placed at the market and it's executed instantly at the best available price. Limit order entry or limit entry order. A limit entry order is placed to either buy below the market price or sell above the current market price. This is a bit tricky to understand, so let's explain this. Limit entry order. A limit, if the euro USD is currently trading at 1.3200, you want to sell the market if it reaches 32.50. You can place a limit sell order, and then when if the market reaches 32.50, it will fill your short. Oh, that's the limit. So thus the limit sell order is placed above the current market price. If you want to buy the euro is there at 1.3050 and the market is trading at 1.3100, you place your limit buy order at this, and then if the market hits that level, it will fill your long. Then we have the stop entry order. Stop entry order is placed above the current market price to sell below. So for example, if you want to trade long and you want to enter a breakout or a resistance area, it's like a buy stop. You place your buy stop above. So you just place it at above. So if the breakout is happening, it's going to be triggered and it's going to be a long or a buy. The opposite holds for a sell stop. Same case when the market is going down, it's triggered and it's entered, and a sell is triggered or a short order. Stop loss order. This one you know. A stop loss is an order that is connected to a trade for the purpose of preventing further losses. The price moves beyond that level that you specify. The stop loss is perhaps the most important order in forex trading since it gives you the ability to control your risk and limit losses. It's good because you are always able to know how much you're willing to lose. So a stop loss, that's what it's all about. Then we have a trailing stop. The trailing stop order is an order that is connected to a trade like the standard stop loss, but a trailing stop loss moves or trails the current market price. So if I put a stop loss, I'll add a trailing stop. So if the market goes up and I put a long, trails up 20 or 30 pips, the trailing stop will trail the market price as your trade moves in your favor. You can typically set your trailing stop loss to trade at a certain distance from current market price. To not start moving until or less the price moves greater than the distance you specify. For example, if you set a 50 pip trailing stop on the Euro USD, the stop will not move until your position is in your favor by 51 pips. And then you will stop, and then the stop will only move again if the market move. So it will be triggered and you make money. So I think I should be done with this one. Good till cancel order is exactly what it said. It's good until you cancel it. If you place a GTC order, it will not expire until you manually cancel it. Be careful with this because you don't want to sell a GTC and then forget about it, only to have the market fill you a month later in a potentially unfavorable position. Then we have good for the day. Good for the day order. A good for day order remains active in the market until the end of the trading day. In forex trading, it ends at 5 p.m. Eastern Time or New York time. The exact time a GFD expires might vary from broker to broker. So always check. One cancel the other order. One cancel the other order is essentially two sets of orders. It can consist of two entry orders, a stop loss, two stop loss orders, two entry. So this one I think I'll explain next time. And then although we will not be using them much, all you need to know is the stop loss, the trailing stop, and also the sell limit, buy limit. We'll be doing them practically. So the next few seconds, let me just look at the market. Any questions? So far, I don't think we have any questions today. So all I needed was to check Euro USD. So I'm waiting for a long here because the market has been creating lower lows. So, and you can see I'm at oversold. So I'm waiting for a breakout here to make some, how much? How much will we make here? $26. So between now and maybe tomorrow, I want you to check this trade. It's on Euro USD, hoping we are going to make something. So I think I'm done for the day. We have FOMC interest rates. We are waiting to see what the Fed will say about interest rates and when they'll start cutting them. So I'll keep you updated on that. I'll be giving you analysis on fundamental. Probably on the next video, we'll touch a little bit on that. I've also sent a link on investing on how the markets will fare for the year. So typically it's an election year. We are looking to be more bullish than bearish because most of the years we've been more bullish on an election year. So waiting to hear from you, waiting for more of your subscriptions, and waiting to learn more this year. So we'll be trading the greenback for more or less the time. So till next time, I'll say adios and have a lovely evening. So thank you very much for your time and keep peeping, keep making more in the market. And thank you. Bye. So thank you. Goodbye. So Omar, I think there was no. Okay, thank you. Thank you too. And then I will upload the class for everyone else to see. So goodbye. Lovely evening.